What's up, everyone, and welcome to Jayconomics. My name is Jay, and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. Hello, everyone, and welcome back to Jayconomics. Today, I have Sheldon Inwentash here. He is the founder and CEO of ThreeD Capital, a very, very interesting company that invests in up-and-coming companies, kind of like a company that we've covered recently, which is Victory Square, except these guys got a little bit of a different mentality. And so let's all welcome Sheldon to the channel. It's a pleasure to have you on.
It's great to be here.
Great. So Sheldon, let's jump right into it. Let's talk a little bit about your journey, how you got here, and why you started ThreeD Capital.
Well, I've been in the investment business for quite a while. You can tell by my either gray hair or no hair. I've been in the business for many years. I'm a chartered accountant by background, but I was an analyst. I was oil and gas analyst. I built a couple oil companies, so it's out in your part of the world. And then basically founded my first company in sort of what I'll call the emerging venture capital space, a company called Pinetree Capital in 1992. That run ended in about 2014 or 15 or so, and then I founded ThreeD Capital subsequent to that with a slightly differentiated model, but basically investing in emerging early stage disruptive companies as well as junior mining companies.
Very cool, very cool. So the way your company's set up, the way ThreeD Capital is set up, we as investors have to value you based on your net asset value rather than revenue, right? So ThreeD investors, I'm sure, realize this already, that you're very undervalued based on this. Now, why do you think holding companies such as yourself keep being undervalued or kind of like overlooked by the market?
Well, I know people call it holding companies. I kind of view it a bit different. I view us as a venture capital company. We're not an ETF. We're not a passively managed portfolio. We're very active. And when I was running Pinetree Capital, we had an average NAV multiple of 2.5 times our value. And the reason we did is because of what I call proprietary deal flow, where we would have companies that we'd help them build to success. We've had many, many exits. And then the founders of those companies tended to come back and go, you know what, Sheldon, we had a really good experience with you. We'd like you to be involved in our new project. So we get involved in the ground floor, an opportunity not provided to many others. And because of the value-added nature of our involvement, we tend to really help these companies get to where they want to be. So I'm sort of used to trading at a multiple to NAV, not at a discount, like many of the peers, if you will.
That's it. I think it's only a matter of time before we can catch up to that. Now, your investing philosophy with ThreeD is to invest in disruptive innovation and to, stuff that's up and coming, right? So which matches a lot of my philosophy as an investor, as well as a lot of my viewers. So can you touch on how you find your stocks, how you do your due diligence on these stocks, as well as how you choose to allocate your funds into these stocks?
Okay, well, currently what we're doing now, just to answer backwards from your last question, is we disclose on a monthly basis our incrementally new positions that we have, not by name, but unless it meets certain criteria. But we have two categories. One is disruptive companies, which in many cases are really around technology. And then the second bucket we have is mining, junior resources. Now, the area of disruptive companies can also be even psychedelics. We'll put that into that category because we believe it is disruptive and new and innovational. And with the digital revolution we're in right now, I've never seen more vibrant, prolific deal flow ever. Now, in terms of how much we allocate to each, currently I believe we're something like 32 companies in disruptive and maybe 22 or 23 in junior mining. And those are both being added to on a monthly basis. There's no magic between one or the other because I'm extremely optimistic on both sectors, but probably skewed a little bit more to the disruptive technology side because the opportunities and the deal flow and the breadth and sort of the depth of those opportunities are pretty pervasive right now. And so we tend to see a lot more of those companies. We have a different approach to many others where people that run these types of funds wait for opportunities to come to them and then they go invest. We probably half our investments, we go and find those companies. For example, peak positioning, or Matrix or a sort of Loop, and companies that I know have been featured with other interviews of mine. And we followed these companies by discovering them in our own way. We do our own due diligence. We don't outsource any of that. Basically, my son, his name's Jackson, same last name. He's, he has for example, tremendous expertise in psychedelics. I'm more on the mineral side. We share technology and we do deep dives. We talk to management. We look at these spaces that they're in. And typically those are when we find an area that we really are excited about, we then go and try to find the undiscovered small emerging companies that have yet to really be found in a way that their market values are very low. Because in this business, what we want to generate to our investors is multiples on our investment. We don't look to hit singles out, if you will, in the parlance. We look for 20 baggers, 50 baggers, and I've had many of those in the past, but the money is made in the buying. So very critical is being able to make your investments at the right valuation and not chase these companies or wait till other people have discovered them first, and then your leverage is much reduced. So we are very proactive rather than reactive.
That's great to hear. I think it's an awesome way to look at things. You got to be first to the party. You got to be the leader, not the follower. So right. Sheldon, this is a question I get asked a lot personally, and it's something that, I'm sure that people probably are curious about. So how do you decide when to exit your positions? So let's say, for example, Peak Fintech or Loop Insights, what are you looking towards, down the road? What is going to be that catalyst to say, okay, this is the time to sell?
Well, typically what we'll do is we'll model out at the start of our investment what we believe that the company is capable of achieving in terms of market value based on their opportunity, their sales growth, their pipeline, how quick they're growing. And often what happens is, in the case of Peak, when we originally got involved at 40 cents, I felt it was a $3 stock at that time. And we modeled it out. Now the shares are $3, and I believe that they're $10 to $20 market potential. And without question, it's done through fundamental and analysis on where we believe that new information which has come to light, which, Johnson Joseph, outstanding CEO, great communicator, and has really delivered way beyond the expectations that we had when we made our original investment. So through that process, one can say, well, wait a second, you're up 8 to 10 times your money, exit. And in many cases, we would probably at least take out our capital. In this case, we've actually added all the way up because the opportunity here is so unique and so large that we actually revised our forecasts, and that affected when we would exit. In other cases, companies exceed our targets, and we feel that perhaps because of macro effects, people get excited and then take these values beyond what we consider their realistic value, then we would probably trim or exit those positions. So we create our own model. We understand what we're investing in. It's not just, we don't sell something just because it's doubled or tripled or quadrupled. On the other hand, if we didn't like what was going on and it even fell in value, we would sell if we didn't like where the company was going. So it's a constant, ongoing, iterative process of when we make those decisions.
That's it. That's a great point too, and that's what I tell people as well. Is like if what you think about the company is the same as it was before, even if the share price has dropped 30%, then that's your time to add, right? It's not your time to panic or sell. And the same thing if it goes up 30%. Just because it goes up 30% doesn't mean you need to sell or celebrate. It's if something has fundamentally changed within that company or within your view of that company, then you can readjust, So I think that's what people really got to take away from what you just said.
On any individual day, values can be quite arbitrary.
Yeah.
We've seen a lot of frothiness and we've seen a lot of fear. So, you buy the fear, you sell the greed, I guess.
That's it. That's a great way to put it. All right. So some people that I know in Canada, some investors into ThreeD Capital that I know, call you the ARK Invest of Canada. So that's some pretty good company to be kind of mentioned with, right? ARK has had a lot of success in the last couple of years. Obviously, you guys are a venture firm. You're not an ETF. But aside from that, and aside the fact that you invest in a junior mining, what do you think is the biggest similarity and the biggest difference that you share with ARK Invest?
Well, I can be somewhat honest here, as I'm not an expert on ARK, other than they're extremely successful company and they're very large. They are an ETF. They're more passive. We're active. Very, very big difference. So we tend to know a lot more probably what's going on in the underlying businesses than they do. But on the other hand, they have a winning model, but their business model is different than ours. So it's nice on the one hand to be mentioned in the same breath, but realistically, we're quite different. We believe we're quite unique. We have a different risk tolerance than they would. I would say we're high risk, high return. I view it low risk because when you invest in very, very early stage valuations, the gravity can only take you so far down below your original investment. Whereas some of these other companies that have big valuations, and albeit are great companies, any negative news can cause a very severe correction. So I would say we're very, very different in our business models, but it's it's flattering to be mentioned as in that category.
Yeah, I think what you just said is so crucial, and so it's like it kind of makes investors go, what? Or like people that are new to investing say, what? But yeah, I totally agree with you. If you're investing into smaller cap companies in the beginning before everybody else at a low valuation, your risk is actually not that high, which is what people don't understand, right? They just think, oh, it's a penny stock, it's risky or whatever. I see it completely the way that you do, and it's trying to get that message out there. It's like, be first to the game, and then low risk, high reward almost. So there we go.
Yeah, the one risk I would bring out is in the junior stocks is liquidity. Right. And in many cases, there may not be enough liquidity to sell if you have a large position. And that's a risk factor that's sort of separate from fundamentals. We originally invested in Peak, it hardly traded. Mm-hmm. So if we had a large position, we let's say, for example, did turn negative on the company, we wouldn't be able to sell unless we took a massive loss. So liquidity tends to follow success, not in some cases failure, but that would be at a very discounted value. So liquidity is very important in these companies.
For sure. So let's talk about, you mentioned before Peak Fintech and Loop Insights. So you're obviously very bullish on both of those companies. I am too. I own a decent sized position in both and have for a little while now. Not as early as you, but still pretty early for Peak. And I want to hear your point of view. So what is it about these two companies specifically that you like so much? And where do you see them going in 2021 and beyond?
Well, I guess the reason I'll say I like them is I believe they're both double-digit companies in terms of the targets that we have. They're both extremely disruptive. In the case of Peak, for example, very rarely do you get to invest in a company that addresses China, but is a junior, small microcap. Often you have to go, and they're much bigger companies. So here's a company that has sold itself in through the best of breed technology into many provinces, has signed up partnerships with the biggest and best companies there in a very strategic area. So extremely unique situation that you do not find every day. In the case of Loop Insights, again, extremely disruptive, extremely both companies, hardworking CEOs, but it is going to basically change the digital world, change the bricks and mortar world to become more digitized. And the information that's going to be available to companies is going to increase substantially. Whereas right now, if you walk into a Walmart or Whole Foods, the corporation knows nothing about you, other than maybe you'll put your credit card down and it will know your name. But now through artificial intelligence and all the tools that they have through their FOBI, they're able to encapsulate all this information about you, your buying habits and so forth, that never was available to the vendors before. And that value is huge. And then through the COVID crisis, it just so happens that, through their wallet, if you will, they could get into the contact tracing business, and which is probably 5% of their company, even though it's gotten a lot of attention. And that's growing substantially, based on recent pronouncements the company's made. So these just happen to be two of ours. We have many others, but they've become a bit more mature and, let's call it, visual in the public's perception because of the increase in value of them. But we're extremely excited on both of them, and we actually continue to buy both.
That's good to hear. It's like I find when companies go up a certain amount and then you're not willing to buy them anymore for whatever reason, well, at that point, shouldn't you be maybe trimming your position, right? Because, you know what I mean?
Absolutely.
Like if you're not willing to buy at that price, then you should be selling at that price. So it's interesting.
Good observation.
Yeah.
Very good observation. Yeah.
Great. So another one of those companies that that you do own and that I find extremely attractive is Blue Sky Digital. And so, yeah, I mean, this is a play in many different areas, but I think it's an extremely interesting investment. Can you go over your thoughts on Blue Sky and briefly touch on the world of crypto as well?
Yeah, so we've been involved in, I'll call it blockchain, because blockchain is what really creates cryptocurrencies through smart contracts. We've been involved for about 3 years now, and we've got a number of companies in our portfolio. The one thing that was missing was the mining of Bitcoin. Now, you also can mine alternative coins like Ethereum, so it doesn't just have to be Bitcoin. So we were looking for a platform that we could help get behind. And we found Blue Sky. We found them. They weren't coming to us looking for it, but they needed capital. They needed some sponsorship. The management are exceptional, very technically focused and very good business people. And they just needed some more capital to scale. And we helped them get the original capital when we did the first placement. And then we also helped them get the recent financing that they just closed, about 2.2 million, of which we also took a big chunk of, because we still believe that there's a lot of upside left here. With the price of Bitcoin basically tripling since we made our original investment, it all gets into a whole theory, certainly that I have, is, we want to bet against the currencies of the world because they're all debt laden and they're heavy with debt. And so you could do that through gold historically, and that's what drew me to gold many years ago. But Bitcoin is the digital version of achieving the same objective. So realistically, one has to diversify in their portfolio. I believe that digital currencies are here to stay, and in fact, they're going to play a much bigger role in financial, fintech, and the whole world of commerce, if you will. And Bitcoin, I call the brand of cryptocurrency. Not necessarily will be the one that you should own everything, but it's the one that's best known. So we're extremely bullish and positive on cryptocurrencies, on blockchain, and certainly on Bitcoin.
Awesome. Good to hear your thoughts. I'm obviously on the same wavelength as that. Okay, so for looking ahead into 2021, for this year only, what is your favorite sector or sectors that you think will pop the most, or you think have the most potential to really grow this coming year?
Well, I can be a generalist in this answer. I haven't really thought about it, and I can be a specialist. My recent answer to the question about crypto really encompasses gold as well. I've also had a big history in investing in junior mining companies. I believe that they have yet to see their real day in the sun, even though the price of gold is $1,800, and very strong believer in silver as well. So in the commodity space, nickel, copper, all the areas that are now being supported by this new bill that's coming out in the US on infrastructure spending, we're going to see a huge reinvestment in all these commodities that have sort of wallowed for a number of years, including the whole area of electric vehicles, another area that we're involved in, again, under disruptive technology. So you have, in a sense, that the two worlds overlap, whereby we're investing in some disruptive technologies that actually have to do with underlying minerals and commodities. For example, a company, Pyrogenesis, and HPQ Silicon, which are basically using technology to take silicon and sphericalize it so that it can actually be used in batteries and replace graphite. So it kind of straddles both worlds. And I would say that that is an area through, let's call it this green revolution, that I see just continuing to be buoyant and explode throughout this year, as well as the junior miners, as well as all this technology now that's supporting the digital revolution that we're in, even exacerbated by COVID, where everybody is at home and has to do things like Zoom, etc. There are so many new, buoyant, emerging, explosive, disruptive ideas that we also consider to be quite exciting. So it's sort of a generalist answer to your question, but also in some cases specific.
Okay, great, thank you. And if you don't mind, maybe we can dive a little bit even deeper than that. Do you have kind of like, let's say 1 or 2 or even 3 holdings that you currently have that are still relatively unknown to the market, unlike Peak and Loop getting some love now? Let's say some holdings that really haven't really matured yet. Can you kind of share 1 or 2 that are really on your radar for 2021?
Well, we just invested in a company yesterday called AIML, which is a very interesting company that has to do with sort of remote healthcare and monetization using digital technology. We invested in these shares at a discount to where they're trading, but it's only beginning, for example. But we are constantly making investments, are many of them. I guess I just can't seem to maybe delineate and come up, because like you say, you love all your children.
Yeah.
But I'm pretty active on social media, and we put out disclosures on companies that we have relationships with. We're involved in an extremely interesting esports company that's trading on NASDAQ. We were involved in it for 3 years. We believe that the upside is quite staggering from here. A company called Esports International, and they just made another announcement today, and we feel that it's been a laggard in the space. So esports is another area in the video gaming space that we are extremely bullish on. So probably if I had a bit of time, I could come up with a list, but off the top of my head, Pyrogenesis is another one that just came out with a very interesting press release today on their silicon technology, plasma torch. Even though it's a $5 stock, I feel that it's just beginning. So not everything has got to be 20 cents or 10 cents. There are some of those that we have as well, but we're constantly making investments. We're extremely active in ThreeD Capital. Like ThreeD Capital basically covers the portfolio diversification across many, many names. So if 1 or 2 doesn't work out, you don't sort of sink the ship with it. You're really you're protected by this diversification, which we think is probably a good idea for most investors that don't have the opportunity to really follow these companies closely.
That's it. And I think, that's kind of why I wanted to bring you on the channel as well, is to kind of give the opportunity to, whether it's Canadian or American investors, like there's kind of like an ETF, but it's not really an ETF, and it's actively managed, and it's covering all these different types of things. So I think it's such an interesting investing opportunity for, again, the majority of people. So that's great.
Another outlier that actually just comes to mind is a company called Oxico. It's funny, they have a symbol AUAG, which is, AU is gold and AG is silver, and it's very unusual that they got that quote symbol. But what's quite unusual about this company and all the other mining investments we have is that they've actually set up a trading arm, and they hired a team from Glencore where they've been able to get their hands on deposits in mostly the rare earth space. And they're using those deposits and then reselling under contract of offtake agreements to big companies and making a spread on that. So it's a company that actually, starting this month or so, I think they're going to be delivering into their first contract, are going to have sales and profits that normally would require many, many years in a mining company. And often you sell that company before it ever has any revenue or profits, because you need a larger company to exploit those assets. So that's one that comes to mind that really has a very unique business model. And I think it's going to be an outstanding year for that company. And I recently joined the board because we announced that we bought a big position. It's only a 50-cent stock. It's not a big market value, but the world is just starting to understand what they do and appreciate it. And I think it's got a very exciting future.
Great, thank you for sharing. I think that gives a lot of viewers a lot to think about and a lot to research. That's great. So for the audience that might want to follow in your footsteps, or perhaps become like a junior version of Sheldon, for example, what is one valuable piece of advice that you can offer when it comes to investing?
Understand what you're buying. Understand what you're investing in. There's a lot of secondhand and third-hand and fourth-hand information that seems to get trafficked out there. And every time something moves up a bit, everybody feels, oh, therefore it's good. Or if it falls, oh, it's bad. So I think that
yeah.
I think there's a lot of emotion in the market. It's not easy. It takes a lot of grinding out to understand what a company does, speak to management, do your own research, and there's no substitute for the hard work you have to put in. It's not an easy business, and if it's easy, you probably got lucky, and we all need luck. I'm a lucky guy. I mean, I found gold mines that, I had nothing to do with, but was lucky. But on the other hand, I invested in very solid management teams. So people are extremely, extremely important. And all I can recommend is that people do their homework and don't just listen to and believe everything that they hear.
Agreed. I think that's great advice. Number one reason why people should invest in ThreeD Capital right now.
It's got an extremely exciting portfolio. We've talked about some of the names, and they're appreciating every day. The journey has just begun. It's not nowhere near where it's going to be and where it's going to go. We are extremely aggressive. If one likes these areas of disruptive technology, electric vehicles, green world, junior mining, infrastructure spending, then you're going to cover a lot of those bases by investing in the portfolio, which is represented by ThreeD Capital.
Great. Awesome. And are you looking towards any exciting milestones in 2021? Anything you're kind of shooting for, or kind of like that?
We have a number of very explosive situations, opportunities in our portfolio, any one which could be worth a multiple of our current market cap. So we are waiting for these milestones to occur. As they occur, we will disclose them. But until they occur, it's hopeful. But these are things that we've been involved in for a number of years. This is only recently that we're starting to get recognition for, and some of our investments are starting to break out that are visible so people can see them. But I expect 2021 to be an extremely exciting year.
Cool. Awesome. Great to hear. And any final thoughts from you? Anything that you wanted to add or maybe share with investors or viewers?
I mean, I think we've covered it. I think we, I just want to define who we are and what we are, and that we invest in very early stage companies. And that is, for some and not for others, but for those that really want to invest in it, we have the opportunity to invest in companies that are just really not available to the general public. They don't get access. Access is the most important thing in the world that I live in, and the world 3D capital. And that's really what you're buying and investing in when you buy 3D, is companies that you would not be able to get in at a discount to their market, with a share, with a full warrant, with knowledge, with management, so information. So this is a differentiating advantage of owning a company like 3D. So I guess as a parting comment, it's a unique situation, and we have a very unique style, and which I don't think is common out there in today's world of small junior funds.
Great. Thank you for sharing. I think this interview was, something that is going to be very valuable for people watching. And thank you for joining us. I think this interview was great, and lots of great information being shared, lots of knowledge, lots of wisdom. So thank you, Sheldon, for joining us. Again, this is Sheldon Inwentash. He is the CEO and founder of ThreeD Capital. The ticker symbol is IDK on the CSE and IDKFF in the OTC. And
thanks for having me.
My pleasure, Sheldon. So have yourself a great day, and everybody else, thank you for watching, and good night.
Thank you.